Hello traders, followers, members, welcome to our new webinar here on streaming on YouTube, Facebook and also X. Just let me know if everything is fine, please. Okay, it seems like everything is fine. Just give me a second. I'm just searching for something. Just a second. Okay, so welcome back to our webinar. As you know, markets have been quite volatile at the end of last week and also at the start of the week, especially on metals. And we have a lot of stuff and charts to cover. I'm just afraid that this kind of a volatility will spread also on other markets, particularly in stocks, and this could impact the US dollar. So we will go through some of the important charts that I'm tracking. Also, let me remind you that today is basically the final day when you can still apply for a free access to our US stock service. So at the end of this week, this service will go to paid version, so you will not be able to see these updates anymore. So if you are interested to look at some of the US single stocks, some big names, then make sure to register on our website and apply for a free access until now it's available. But then obviously this will be taken off. So if you are trading US stocks, I'm quite sure that this will be very interesting for you to check. So firstly, what I want to talk about, as I already discussed last time, is about the dollar index. As you know, we have been talking about dollar index and positioning already at the end of December. I said that we are most likely moving into some very extreme oversold conditions here, where large speculators are heavily short, and this could basically mean that at some point we will stabilize. It doesn't necessarily mean that we will see any kind of a strong recovery on dollar index like back of an uptrend, but maybe just temporary stabilization. That's definitely something that we have to consider. Dollar index is still not that is still doing quite fine compared to where we have been back in 2008, and if we consider where the current stock market is, right? So if the stock market comes to the downside, of course there could be run to safety, run into cash. It may not be run to metals, because metals, as you can see, have seen massive liquidations in the last few days. So most likely traders, investors will step aside and will feel safe in cash if stocks would also see some kind of a pullback in the near in the near future, in the upcoming weeks. Now, looking at the dollar index from an Elliott wave perspective, we have been discussing about this in the past, that we are still missing one more push to the downside before market could possibly stabilize. So we were looking for that move in January to the downside, when market could maybe try to stabilize or maybe look for some near-term support. And so far we have seen a very nice leg to the downside. I'm not saying that we are bottoming here, but we are certainly need to have some eyes on different interpretations and wave counts and be ready on a reversal rather than surprise. Now, our primary wave count still suggests that we could see, if that was a flat for a wave 4, that we could see another leg to the downside, the final wave 5 of 5 to complete this bearish sequence from November highs, and then we see a massive reversal. But also there's another interpretation. The valid scenario is that what if that was another free wave drop, and we have seen this recent move that came out of a triangle. Now keep in mind that moves out of a triangle are finally in a sequence, right? So usually you will see a lot of traders being on the wrong side of the market within this range. They will finally give up on the potential breakout, but when market really breaks on one of the sides, well, that's when they want to ride the trend. So we can already see that there's a lot of talks about dollar weakness. There were even some questions for Trump, but somehow Trump is fine with it. But we know that whenever those questions come, will show up, it means that there is still some concern generally about the weak US dollar, right? So I just still think the dollar will come back. It's just a matter of time and the cause, of course, what can cause the potential rebound. But from an Elliott wave perspective, I certainly would not be surprised if we will see this dollar strength still that will show up this year. But of course, saying or predicting exact bottom, it's a bit tough speculation at the moment, but that's just something that we have to consider. Now, when we also look maybe on the intraday basis, what really matters the most right now, if we zoom out here, zoom in, not out, is that we have this gap from last week, right around 97.40. So these gaps, whenever they are filled, usually market will then reverse in the previous direction. So if dollar is really headed to the downside, that's the spot where we have to see this reversal happening. Also, we are at the start of the week. It's Monday. You know how I feel about Mondays. Mondays can be reversed. So I think that there's at least some temporary sell-off could occur in the next few sessions, but it's yet to be discovered what kind of a sell-off will show up and what will metals, what will stock do at the same time. If from any reason this week we just continue straight to the upside and overlap 98.26 level, then this wave count would be validated, and major low, as you can see, I write it down here, major low will be in if this overlap happens, right? So keep an eye on, maybe if you're like an intraday trader, if you're looking for some setups that last only for a few hours, maybe this level is quite attractive, interesting. If you're waiting on some major turns, bottoms, confirmation about the trends, then I suggest to wait and stay on the sideline and maybe wait on this overlap. If it happens, then I think that some major things could develop on the markets. Also, looking at the euro dollar, as you know, we have been looking for this triangle, tracking it for a while. We have been long with members from our wave E bottom down there, and so far you can see that market already touched levels above 1.2 levels. So that was basically our minimum upward objective. I'm not sure if wave 5 has ended here or maybe another touch of that highs will occur, but that's definitely something that we have to consider, that we are in a fifth wave, meaning that you are in the final leg of the higher degree uptrend. So we could easily see deeper price action or sideways price action with possibly retest of much lower support levels in weeks, maybe even months ahead. Also keep in mind that this week we have some important data coming out the ECB rate decision, there are no changes expected. Also, what's important to note is that inflation came down from 2.2% to 1.9%, and there were even some talks from ECB members discussing about the exchange rate. In the past, some mentioned that 1.2 looks fine, it's acceptable, but meaning well beyond that level, maybe they will have to act, right? So because of the recent euro strength, who knows, maybe they will even discuss some potential new rate cut, and this could obviously impact the euro, or maybe even drive it to the downside. Now, if we look at some the intraday wave structure here, which obviously it's same thing or the opposite, like I have been looking and discussing about on the dollar. So what's happening right now is that so far we have a very deep retracement. Notice that that was a small gap from last week. We haven't seen any kind of a rebound from that area, so that's a bit worried. But for now, we still have 3 waves down. So I'm not saying that we are going straight to the upside. I just want to see what market will do in that area. I just don't want to touch it. But if we'll see an overlap with 11770, I will know the top is in place. If market suddenly will rebound and we will see a move back into this consolidation here, then we could easily say that that was an ABC drop. So I don't want to be smart ass here and saying where the market will go. I just want to, from market, a bit of more confirmation to know if maybe a wave 5 is really still ongoing, or maybe we have an important top forming. Keep in mind that now when metals have seen a massive reversal to the downside, a lot of liquidations occurred, and a lot of investors moved into cash, right? I doubt that there will be a rotation into stocks at these high valuations. So in my opinion, that's something that we just have to consider, and what can cause, or what can this mean for the US dollar going forward. Now, also we have Bank of England rate decision as well this week. Let me just change apply to all. Okay, so we have Bank of England rate decision as well this week. Let me just check my notes here. No changes are expected. Labor market data have shown continuous softening, but the CPI data came up from 3.2% to 3.4%, so a bit higher inflation. So it actually, I'm just wondering if maybe this could be some kind of a situation where they could maybe even talk about potential rates that they are fine, or maybe even some hawkish views. This then definitely could send cable to the upside. For now, we are testing some interesting support levels, but the wave 4 right now, as I'm seeing, is coming a bit lower, but we are still at the 50% retracement. So we are also in this one, we are moving now, trading right now in the area where we want to see a stabilization and reverse to the upside. We don't want to see market moving back below 1.356, because if that happens, then, as you know, we will have to zoom out a little bit and look what's happening on the higher time frame charts. Keep in mind that here market already moved to a new high. It was the 5th wave that we have been calling months back. So now this kind of a, let's say, easy prediction is back, because the whole previous corrective drop is already behind, has already been erased. So it means that sooner or later we will see a completion of this 5th wave. So now for this week, as I said, in the next few sessions, we may have some very important and interesting price action, which will tell us what is going to happen with the US dollar. But if I would have to maybe look for some potential trades, I would most likely be avoiding euro longs or pound longs. I would rather look at commodity currencies. Commodity currencies are still doing pretty well. I mean, if you look here at this overlay chart, you can see that commodity currencies are much higher compared to euro or pound versus US dollar. So if I have to choose something, then maybe Kiwi, Aussie, that's something that I would watch for, right? I would, as I said earlier, I just want to see what happens, for example, on the euro dollar. So Aussie, as I mentioned it, this one is holding up quite well. It also has a very beautiful wave structure. We also came very nicely back into this attractive support zone. Also, market predicts that there are 72% chances that Bank of Australia will hike interest rates for 25 basis points. Also, latest inflation data came up from 3.4 to 3.6%, right? So you have some data and upcoming rate decision that could confirm the further strength for the Aussie. Or if you wish, maybe if you are more bearish on some other currencies, like maybe if euro dollar will still somehow be weak, then maybe even you could look and consider what's happening or what are the chances for Aussie strength versus other currencies, meaning on crosses, right? Like euro Aussie could possibly continue much lower. But overall, I like how Aussie is acting here. So as I said earlier, if I have to be dollar short, then Aussie or maybe even Kiwi could be quite attractive after those retracement. What I really like about Kiwi here is that we are still trading here below July 2025 highs. So you can see that it's a bit different play compared to cable, which already tested the highs. So I think that Kiwi, because also it's commodity currency, I think it's much more, to me, it's much more attractive than pound at this stage. So that's definitely the attractive support zone at the upper line of this potential base channel. Invalidation levels very well defined. If we see a move back below the previous wave 1 territory, then we will know that that's not an uptrend anymore and that trend is definitely changing. But for now, as I said, commodity currencies are still looking quite good here. Also, let's take a look on dollar versus why my PC is working so slow today. Let's take a look on dollar Swiss. So on dollar Swiss, I adjusted the wave count actually yesterday, Sunday night. I like to do charting on Sunday night because it's very calm and I have time for my, my head is clear. We don't have any other news distractions whatsoever. So back then I was looking for this interpretation. I changed the wave count. Previously I was looking for potential ending diagonal, but because of not really, let's say it was not really the perfect wave structure to fit an ending diagonal, I came out with an idea that maybe this move to the downside still came out of a triangle, but in a fourth wave, rather than some kind of a wave B of 5 of an ending diagonal that we have been tracking before. Anyway, that's not really important. What is important right now is that moves out of a triangle are finally in a sequence, right? We know what Swiss National Bank that is watching Swiss franc, especially after this recent rise of Swiss franc against the US dollar. So that's something that we have to consider, that these cycles, this trend could turn around. Also, as I said, moves out of a triangle are final in a sequence. So there may not be a lot of room left for more weakness because wave 5 follows after that push out of a fourth wave triangle. So meaning that you have seen 5 waves down. Let me remove this sound. It means that you have seen the 5 waves down from that of that sequence from May highs of 2024. So we could be seeing a massive reversal happening in weeks, maybe even months ahead. I'm not saying that that's low, maybe we can still retest it, but major picture is what I'm seeing it right now, right here. Also, let me check my notes here. Dollar yen. Now dollar yen is also quite interesting and attractive. So earlier I mentioned that commodity currencies are still fine, maybe versus wait a second, versus the US dollar, but dollar yen could also be interesting, especially if stocks would hit new resistance, would see some sell-off, if maybe there will be more speculations that Bank of Japan could hike rates. We have seen a massive, in the future we have seen a massive reversal to the downside, as you know, and now technically it also looks quite juicy, I must say. I mean, we had a very nice, beautiful, sharp breakdown, which looks like a wave 3. We even resumed lower after this gap, so now we came slightly back into this gap area. So for the start of the week, at least temporary reaction or reversal lower is something that I would expect. It doesn't necessarily mean that you have to see all the way back fall to for a new low for a fifth wave to make money on the downside. I still think that this could be some very attractive and interesting reversal zone for potential sell-off, let's say maybe already happening on Tuesday. Wednesdays is what I would be expecting this kind of a reversal, because also if you look at the daily chart, what I also like here is that here we have seen a massive free wave recovery back to the previous highs. We failed up there. It was just a temporary spike above that levels before market sold off. So I'm thinking that maybe now when we fill this gap, maybe we will have much more weakness coming through. So that's more like a technical setup. Especially I like the idea of this gap here. Now let's take a look on metals. So if you are following me on X, you know that I have been posting this chart, said that there's a massive volatility going on metals, and usually when that's the case and the price is at the highs, you have to be very careful. So basically what happened is that we have seen these volatile price moves already Thursday, Friday morning, and then because it was the final day of the week, end of the month, of course investors were concerned that market could potentially see further weakness, especially after some massive intraday sell-offs. So there at the end of the week, you have to understand that there are a lot of position adjustments. There will be a lot of potential profit taking. You will not see new positions that will try to buy the market that high at the end of the month. You will typically those kind of traders will wait for new month to start and review the situation and rather buy later rather than chasing the markets and profits into the end of the month. So what happened is that there were a lot of liquidations happening during the US session on Friday. Then this resumed on Asian session today, and then market stabilized today during the European hours, because this what happened during Asian session today already occurred on Friday during European hours. So basically it was not that much selling pressure anymore, and that's why market stabilized a bit this morning. So what I think it may happen is that market will now, metals could move both sides. It could still be a very high volatile price action, but when I'm looking in combination with the US dollar, with what's happening on metals right now, some investors, traders will lose trust on metals, and this is what could keep it in consolidation for a bit longer. Also, if suddenly we will see recovery on the US dollar, if US yields will start following US dollar to the upside, then you know, like I shown here, it's shown here on this chart below, then you know that gold will also most likely stay in consolidation. Now, if you look here on this this chart, I mean, it's very hard to make any kind of a short-term view here, but I mean, if you see something like this, that looks like an impulse. We touched some very attractive, interesting levels from where short covering rally is already showing up, and it could keep the price sideways or even higher for the near term for this wave B rally to to show up. Also, I updated this kind of wave structure earlier this morning for our clients, and I'm still thinking that we have room for further upside, even if that's wave 4, but I would not be surprised if wave A has ended here. We could easily see more upside because this looks like the first leg of recovery here. Also looking at silver, I mean, very similar situation. Obviously it's much more volatile. I mean, this thing has seen a drop of 40%, so it was a very dangerous to trade up here, because also like we've been looking for members, we've been tracking this ending diagonal and notice what happened to it. Was a very strong, very sharp sell-off, and whenever you see this kind of a patterns at the top of a bull markets, you just really have to be careful. It doesn't mean that market has to do this kind of a sell-off, but it's good to be maybe rather stay aside rather than chasing on the bull side. Also, if you take a look on the S&P 500, well, here again, I mean, this market is just going nowhere at the moment. We could still possibly retest the highs, but watch the US dollar. If the US dollar will continue higher, it will be very difficult for S&P 500 to make any kind of aggressive push higher. Keep in mind that here we are still looking and tracking this ending diagonal that could be in a fifth wave. Of course, fifth wave could possibly make another push to the new high here, retest the highs before market potential reverse lower, because now a lot of traders maybe in stocks are also watching this market from a bit of distance, but when market will make a new high, they will say, okay, we are back in risk on mode. But that's exactly when we'll have to be very careful based on this wave pattern, especially if the dollar will be also showing us some evidences that it's bottoming. So we'll see what happens up there. I still think that there is a chance for one more push to the upside to fully complete this wave 5, but then considering this pattern, I mean, it's a very dangerous pattern, and if you are looking for any kind of a bullish setups, of course, that's why you have to be prepared rather than surprised if the market turns. That's one thing. The next thing is that, you know, this seasonality shows that in February we could see reversal, especially if the beginning of February we'll see more upside. As I said, maybe we'll see this wave 5 and then we see a reversal lower. So I would be very careful on this one. Also, this week, as you know, there are some earnings: Palantir, AMD, PayPal, Google, Amazon, MicroStrategy as well. And if we look at here at the MicroStrategy, they just bought more Bitcoins just today, 855. It's much less compared to the a few previous purchases. So I think that of course they will stick to the plan, but price keeps moving to the downside. Even if we take a look on its stock price itself, I mean, we are still in this corrective decline, and I think that MicroStrategy has room to retest these levels from summer of 2024. This could be a massive support. And when looking with the Bitcoin, let me check Bitcoin. You can see that Bitcoin is also approaching some interesting support here around 74k, and that's technical support because that was the swing high back in March of 2024. Then we had this swing low in April of 2025, and that was just not one April. It was April when Trump made all of these changes to tariffs, as you know, and that's why this is even more significant, because since then all of the markets made a very strong rebound, but a lot of markets already retraced to these April levels, and Bitcoin is now also chasing these levels. And I think that we could see some stabilization down here, maybe in the next few weeks, but after market completes 5 sub waves down in this 5th wave, which is not really the case yet, and we will be updating our members regularly. But watch out, maybe here short-term holders, this one, as you can see, already start selling at the loss. You can see this spike, so that means that we are in the face of extreme pessimism. Okay, there are some traders that are giving up on this potential their bull run or whatever, and that's exactly what we want to see, right? We want that market will liquidate those that are long too soon, and then when there will be a lot of pessimism, that's when market could bottom. And we have been talking about that in past updates, but this data, I'm not really sure if that's up to date. These are the long-term holders. These are still not selling at the losses. We need value below 1. We are close to 1, but definitely something like we have seen these extremes here in the past few years would be much more interesting and attractive for a longer-term bounce. But it makes sense maybe that we are not there yet with long-term holders, because if you will take a look here, maybe on a bigger chart, you are still only in wave A of a 3-wave decline, and you know that this correction can last. But certainly we are coming into some very attractive first support, but maybe much more attractive could be around 60, maybe even 50,000 if we get there with this 3-wave drop. But within this correction, of course, there will be rallies, and maybe the first one will not be that far away. Also looking at the Ethereum, as you know, has made a retest of the highs here back in September, but now simply it cannot recover, like, and same thing with other altcoins. And I'm just afraid that we are stuck in a higher degree correction. Could be a triangle, a running triangle, could be even a flat, but just be aware that maybe some attractive, much more interesting support could be still a bit lower. If we consider that Bitcoin has important support from April here around 74k, well, the same date brings the price of the Ethereum at 1,400, right? So I think it's still quite far away, and you just have to be prepared, and maybe rather than surprised if we see this kind of a drop. But in the short term, if we will see some kind of a rally, it's total fine. I mean, we have seen the recent break down from a consolidation here in a 4th wave, so we could see another 4th wave rally, but definitely I would not be surprised to see some short covering in the next few weeks. Looking at Ripple, this one is also coming to the downside. A lot of liquidations have occurred. I think at the end of last week it was most liquidations more since October 10th, I believe, when we have seen this kind of a sell-off here. So now we are still at very attractive yellow box, potential trade zone if you wish, but of course because of this wide range of supports, there's still a room for another 10-20% of a drop before market may potentially stabilize. But the whole drop here from July highs is definitely having some corrective look, so that's definitely that's something that we want to highlight. Okay, traders, I hope that you enjoyed this presentation, this webinar. Please make sure to subscribe to our channel, press a like on this video, and hopefully I will see you again next Monday when we will go through a lot of markets. If you want obviously more of our analysis, I just welcome you to check wavetraders.com and apply for free access on the US stocks, or maybe explore some of our services of crypto and the FX if you are interested more in currencies, metals and other things. Traders, good luck this week and talk to you soon. Bye.